Morning. Welcome to Stock Market Today for Thursday, October 22nd, 2020. This is your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Follow me on Twitter at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider that hits your inbox every trading day before the market opens. So U.S. equities lower yesterday following some volatility in the prior two sessions. Energy was the biggest loser at the sector level. Comm services outperformed. Treasuries were unchanged to weaker with the curve continuing to steepen. Dollar was down against the yen and euro. Gold finished up 70 basis points on that dollar weakness. WTI crude was down 4% after the latest U.S. inventory data. And as we get to the desk this morning, futures are down about 30 basis points after Asian markets were mostly weaker overnight. Japan and South Korea lagging. Hong Kong did manage a small gain. European markets are on the defensive again. Treasuries are little change. The dollar is stronger against the majors after hitting a 7-week low yesterday. Gold is down 50 basis points, and WTI crude is up a like amount, 50 basis points. That's the structure heading into the day where we see another close near the lows for the fourth consecutive day. Interesting dynamic here for the S&P 500, where early strength is being faded. If you drill down on, especially on a candlestick chart, but you can see it was the fourth day in a row where a rally attempt gave way to a close near the lows of the day. Obviously, that's not the type of action you want to see if you're bullish. We are still holding above support at the 340 level, right? We saw yesterday's close at 342.73. Qs holding above 280, IWM slightly below that 160 support line, so something to keep an eye on in the near term. Now, the SPY and the Qs are nearing oversold conditions by our work, so what we're going to do is look at where is price relative to key support when we reach those oversold conditions. That, to me, is how you kind of throttle how aggressive you want to be on the long side of the portfolio, right? Let's just kind of take it from a framework perspective. The trend is up right now. We're in this near-term consolidation, but the bigger picture trend is up. What we want to see now is how aggressive do we want to be? Well, when we're overbought within the context of an uptrend, it doesn't make sense to be aggressive, right? We're in this range here, right? The time to get aggressive when it was back in the end of September when we said it made sense to redeploy capital, right? So now you're just sitting in your positions. You have your risk management process in place, and you kind of just ride the wave at that point. And then you reevaluate the situation, right? Think of overbought and oversold as where are we within the trend? It's kind of a sine wave. It's not a perfect sine wave, but you want to kind of look for oversold within the context of an uptrend. So if we're in an uptrend, we're above support. When the metrics get to oversold, that to me is when it makes sense to get aggressive on the long side of the portfolio. So these are the key levels. We're watching them closely, as well as all of the other data points that we use to build the mosaic for our market framework. Let's take a look at our market in a minute now. What are we writing about today? Well, our early strength is faded for the fourth consecutive day. We hit on that. I think there's an opportunity in innovative healthcare. We'll talk about what that means a little bit later on in the show. Today, we are screening for stocks near 52-week highs. We'll chat on that in a moment, and breadth metrics remain constructive. Futures, as I said, however, do point to a slightly lower open here today. So right across the board yesterday to varying degrees. The Dow down 35 basis points, 3 to 5 bulls to bears as we check in on the power bar ratios. S&P 500 down 20 bips, 133 to 87 bulls to bears there. NASDAQ was, I call it an outperformer, only down 8 basis points, 25.15 bulls bears. Small caps were your underperformer with the IWM losing 90 basis points. And as I said, closing just below that 160 support level. So we'd like to see a quick rebound there. 734 to 266 bulls to bears. Bonds down ticks and yields higher. Comm services, your best group on the day, largely a function of the internet and internet advertising names on the back of the report from Snapchat. Twitter had a big day yesterday. 6 to 4 bulls to bears in the comm services space. Let's check in on that screener now. A couple days a week, I'm giving you guys a screen. People seem to like it. The feedback has been really good. So what am I looking at here? We've had a choppy market for the past week, right? And for all intents and purposes, those closes near the lows speak to some very short-term weakening activity, right? Nothing that's caught our attention overall just yet because we're still above that support level. So what I wanted to do in a screen was say, all right, we're holding support. we're nearing oversold conditions. What stocks, right? If it does make sense to get aggressive, where is the opportunity? What stocks are trading near 52-week highs, right? If they're trading near their 52-week highs as the market's consolidating, arguably these are stocks with relative strength. So I screened the Russell 3000 for bullish and very bullish stocks trading at or near 52-week highs. The differentiator here, though, is I want stocks that are near 52-week highs that also have strong money flow, i.e., they're showing signs of accumulation. I don't like when I see stocks trading near a 52-week high with bearish money flow. That could be a sign of distribution or stealth distribution under the surface. So we want to kind of get around that by looking for stocks with strong money flow. So you can see some names here, some recent call outs by myself here for Chaikin clients like Archer Daniels Midland play on that inflation theme, especially as it relates to ags, right? We're seeing, Lennar, obviously a household favorite, came under pressure yesterday. Costco, obviously a quality name. Synopsys, a software company that caters to the semiconductor industry, which has been strong of late on both acts. We'll look at software a little bit later on, right? Toll back in the home builders, Lowell, Lowe's, a similar play. So a lot of interesting names here to have on a watch list and be doing more work on. Sleep Number plays on that housing trend. So a lot of interesting dynamics at play here. It's a good list, a pretty broad list from a thematic and industry standpoint. So certainly worth taking some time to look at these stocks and seeing which ones provide the best opportunity for you, your strategy, and your time frame. So take a look at this screener here today. Let's move to our sector tracker now. Movement of the last 5 days for the major sectors. The only one that's green is utilities. Now, I've kind of said what I have to say about utilities. Uh, I I can't fully get there that it's defensive positioning on its own, right? Just because breadth remains strong, right? Other dynamics that I'm looking at, right? There's certainly a lot of puts and takes. And if I really wanted to argue the bear case, I could. But the trend is still up, so that keeps me from doing that. We're holding support, right? If support breaks, we have to start thinking about what the bear case is from a technical perspective, and that's when people would start to look at what utilities are doing. Right now, I think it's a function of people rotating out of treasuries, but want kind of a replacement from a yield perspective. You take a look at something like the 10-year, right? It's yielding 80 basis points, just over 80 basis points yesterday. The utility ETF, XLU, has a 3% yield, right? So maybe that differential, that 2.2% differential, is enough to take on the added risk of owning stocks over treasuries, albeit utilities. So that's kind of how I'm looking at things right now. Everything else lower. Comms obviously had a good day yesterday, helped the cause. Financials towards the top of the list, but down. It's earnings season still. It's not exactly been the bullish catalyst that I was looking for or hoping to see in order to turn more positive on the group, but it hasn't been a complete disaster either. Industrials and materials are our favorite cyclical sectors. REIT, staples, discretionary, middle of the road, healthcare, tech, and energy, bottom of the list. You know how I feel about energy. I do want to I want to like it just because I think the opportunity would be massive when it turns, but I also don't feel like I need to be the one to pick the bottom. We can wait for signs of stabilization and a change of trend and still have a really good opportunity within the energy complex, in my opinion. Now, our industry in focus today, software and services, which has just been a monster. Over the past 6 months, it's outperformed by over 17%. 44 bulls to 23 bears for a group that's ranked number 12 of 21 subsectors, having moved down one slot over the past week. So some names that we want to take a look at within this space as potential ideas: Conduit, CNDT, Conduent actually, Virtusa, VRTU, more on the services side of the game, and CDK. All three of those stocks have very bullish ratings and are holdings of a fund that looks like this. And here's how I'm framing it up. All right. There's no two ways about the fact that that's a strong trend to the upside, right? Strong trend above a rising long-term trend line, bullish power bar ratio, solidly bullish money flow over the past 12 months, and solidly outperforming. Now, what we want to see is a move towards these oversold conditions and into oversold. What I don't love is the resistance right here and the fact that we failed at it. So again, you calibrate your aggression, right? Go back to the major market ETFs. We're not oversold yet. And here's a leading group with a similar dynamic. It's not oversold yet. So it's something you definitely want to be keeping an eye on. There are names in there that you should be up to speed on, have on a watch list, and be ready to go. when that makes sense. But in terms of how aggressive you want to be, I don't think we're there yet, right? I don't have the same confidence in saying deploy capital that I did back at the end of September when we made that call. So now let's look at what's trending. Yesterday's S&P 500 movers and shakers, our gainers and losers. Twitter, TWTR, up with that Snap report and a lot of other internet ad-supported names. Doing well yesterday. CB didn't see anything company specific to add 7.5 to that stock. Avery Dennison reported earnings, stock up 6%, and then it catches a downgrade from JP Morgan this morning. So we'll see how that one plays out. Travelers, TRV, following through on an earnings report from the previous day, up 5.8%. Sinfin, didn't see anything to drive trading there. That stock higher by 5.6%. The loser side of the board, Etsy down 8%. Nothing company specific there. Netflix reported earnings. We didn't like what we heard from the sub numbers. Netflix a bearish rating here at Chaikin Analytics. PXD, people just still digesting their purchase of Parsley Energy. That stock down 6%. Second day in a row down big. Concho CXO was downgraded at Raymond James, and COP oil inventory data. So really, you had the added kicker of the energy space just being weak on the inventory data in the U.S. To impact these names just a little bit further away from what's precisely company specific. Let's chat now. Breath remains constructive from an intermediate and long-term trend perspective. Okay. The shorter-term metrics have faded a little bit more, which is to be expected given the choppy trading that we've seen over the past week. But if I take a look at the percentage of stocks in the S&P 500 that are above their 200-day moving average, we're still solidly bullish, 71.5%, right? So long-term trend perspective still looks good. We're holding above this breakout level. We're holding above 60, which is our sign that the majority of stocks, right, the majority of stocks, right, a healthy majority, if you will, are above their long-term measures of trend. Same goes for the intermediate term. The percentage of stocks above their 50-day moving average at 61%, having come in just a bit, but still above that 60% mark that marks a healthy majority of names in intermediate term trends. And if we take a look, as we discussed last week, the advanced decline line for the S&P 500 is still holding above that September breakout level, and those breakouts tend to precede similar activity for the index. So that's something we're going to want to pay close attention to and watch closely. If that picks up, right? So now think about the playbook. We become oversold, we hold above support, and then under the surface, you're seeing breath start to move in the right direction. Connect those dots, throttle, right, or calibrate how aggressive you want to be on the long side of the portfolio, right? It's always about connecting the dots and building that mosaic and taking a weight of the evidence approach. If you want to be bearish, there's always things we can go find. I can go find some stuff right now to be bearish about. But when we look at things holistically, we're not there yet. So just something that's how I kind of look at things. And hopefully you find that type of work helpful. All right. So innovative technology, ARKK, a money manager, active ETFs, right, who believes in innovation as a theme. And I believe in innovation as a theme as well. Their genomics fund, ARKG, came under some heavy pressure yesterday with the CRISPR names, the CRISPR gene editing technology, those names coming under pressure yesterday. So this fund was down 5% yesterday. And what was interesting to me is it starts to present an opportunity. By our work, it's oversold at Chaikin Analytics, still bullish, still outperforming. You can see the scooter line at the bottom of the chart here. Just look at that outperformance. So what I see is, a pullback within the context of an uptrend with support in the $60 to $65 range that houses the rising 50-day moving average. Now, RSI has moved down to 50. We want to see it hold here. So I think this is an interesting idea, not for the faint of heart. Let's be clear, okay? Not for the faint of heart at all. But I think an interesting opportunity, a name that became extended, pulled back, has some solid support just below, while momentum for the most part remains in the bullish direction. So we'll wrap it up with healthcare services, which looks good also. That's it for today. Take us for a test drive. I'm with you tomorrow.